First Republic Bank has become the latest addition to the recent bank run crisis. Starting in March, we saw all these banks got into trouble, and now this Monday, the regulator seized First Republic Bank, and today it is not even listed and traded in the exchange. Let's take a look at all these major indices, how the recent bank run has been affected them. And as usual, in every crisis, the policymaker, the central bank, will have countermeasures. And I'm very interested to ask myself these two questions. Number one, will the market able to manage this bank run crisis ultimately? And number two, or will there be more troubles ahead? Before we get into this discussion, please take some time to read into the disclaimer down here. Let's get started with our discussion. The bank run crisis happened during the first and second week of March, and it affected all the major indices. But something also pretty constant is that they also rebounded together and recovered very strongly after the third week of March until today. And I'm very curious to find out between all the four major indices, which index has a heavier weighting on banking stocks. And the answer is the S&P index. It has about 13% of banking stock in its index composition, whereas the Dow Jones have 4 out of 30, but its weighting is much lesser. Now the next question, if bank runs remain uncertain, which market or the index will be affected the most? My answer would be all of them, but I believe it's going to start with the Russell first and followed by the rest of them. Now Russell itself, it is Russell 2000. When I say Russell 2000, it represents 2000 companies. Now, if the banking crisis persists, what if the 2000 companies do not hold well? Now, it should affect the rest of the major indices. This means that Russell may be leading the pack. I felt that Russell 2000 is the most reflective of the US economy compared to other major indices with big names like Apple, McDonald's, and Microsoft we usually know. In fact, the big names, they have been hoarding cash over the last few years. And I suspect that their think tank or the board of directors knew inflation is coming, and that will lead to higher inflation, and that's about 3 years ago. Knowing that this will make borrowing very difficult today, but it is not a problem for most of them because they have prepared for it. But not for the smaller or medium-sized company like those of the Russell 2000. They're too busy with their day-to-day operation, and this high interest rate environment that the whole world is facing today really caught many of them by surprise. And who exactly is Russell 2000? There are 2000 medium-sized companies with each value between about 300 million to 2 billion US dollars. The index includes a diverse range of companies from various sectors, including the financial, healthcare, consumer goods, industrials, and technology. In my opinion, Russell's represents the true economy of United States. And we're going to study on Russell again in a short while. Why it may lead the rest of the major indices, especially this very interesting season we are all in today. Before that, let's try to understand this current yield curve, and it is related to my statement I just made earlier, why Russell may lead the rest of the major indices. Now, the current yield curve that we can see here is that the short end or the US Fed Fund rate, the interest rate or the yield, it is higher than the long end or the far end, the 30 years bond. And this is putting the banks in a very difficult position to lend out money. And we all know that the bank's main business is to lend out money and to earn an interest rate. Now let's try to understand what happened to a normal yield curve where the short end, the float rate or the Fed Fund rate is way lower than the further end. Now, during a normal yield curve, this is what happened. Bank will be able to borrow at a lower short-term interest rate from the central bank and lend out at a higher long-term rates to businesses and individuals. However, this strategy is proving difficult for banks to execute in the current environment, which is the inverted yield environment. And if this inverted yield environment persisted, businesses may not have access to really credit lines, and it can have a negative impact to the financial market. Now, this is because credit lines are a crucial source of funding for business to invest in growth and opportunities, making necessary purchases and manage day-to-day operation. Without access to credit lines, businesses may force to cut back on their spending or delay their investment, which can lead to a decrease in revenues and earnings. In turn, this can cause a decline in the stock prices, affecting businesses and potentially causing greater market volatility. Personally, I will use Russell to time the market, not all the time, but for this time round. Now let's go over to this chart looking at the major indices. And the topic is that I believe that Russell will lead the major indices. Now, why do I say so? And let's do a recap here is that we saw the first 2 weeks of March. That's the first time we heard about the bank run, and it affected all the major indices. And then the rest have performed, but not quite for the 2000 stocks. And what happened we are seeing here is that it ranges. Now, let me just draw this range. And in a short while, I will explain what is happening when the market ranges. Now, yes, I know that we're looking at the technical analysis, but I also term as when we study into technical analysis, we're studying into the price behavior movement. Now, when the market range, it means that it is loss of direction. It's heading nowhere. There's a tug of war in prices. There's a tug of war between the buyer and seller, and the range, or it will not range forever. It will ultimately break either side. Of course, I do hope that Russell will break on the top side, but if it does not, after a while, let me just get this up. If it ever breaks below this range. Now, earlier I did say that I'm looking at Russell as it is with multiple industries and sectors. It represents the true economy of United States. And I believe that this time around again, that as Russell moved down, the rest of the major indices were likely to follow. I will include some information on the different types of Russells and also some of my past tutorials relating to today's discussion below. Keep watching it again and again. You too can get into the market with greater precision. Always enjoy studying the correlation between the markets and to uncover the potential opportunities. And I hope today's sharing, it will be helpful in how we invest and trade. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.